Bansal, good morning. Thank you for joining us. I want to straight away talk about themes and sectors. Is there still more scope of appreciation left in corporate banks, or now corporate banks are fully priced? ICICI Bank is not trading at 1.5 times book. It is now trading at 2.5 times book.
Yeah, so before I give you the exact answer to your question, just for the benefit of viewers, I'm sure everybody is aware some numbers. We have seen the large cap index, namely the Nifty, moving up close to 10% from the lows in mid-February till the last day of the financial year. If we specifically take the month of March, it was about 8% move for the Nifty. Now within that, the significant outperformers have been the banking and financial services, which it is expected to be. It's a high beta sector. Amongst the other high beta, of course, real estate and auto haven't participated, and expectedly the low beta, the IT and FMCG and such others have underperformed. So now we come to your question that okay, in this backdrop, especially as you rightly said that after having been a sharp move already and the valuations having gone up, is there still steam left? Well, 2-3 things. One, it depends in the shorter term how the fund flow remains. If the fund flow continues, especially global funds flow, then the first thing that they look for is the high weightage, high performing sector in any market and with high liquidity. And this is where the banking comes in. Unfortunate if it's highly valued because of the liquidity criteria, because of the high weightage in the banking sector, that is where the global money will have to keep coming in. Number one. Number two, within this, if we look at the relative valuations, still there is a sharp gap. So while you are right that ICICI Bank has moved from 1.7, 1.8 to 2.3, 2.4 or even 2.5, depends on the earning expectation that you have. But at the same time, there are other corporate banks which are trading at close to 4 to 4.5 times. Now, of course, there are differences in the financials of the respective banks in terms of return on assets, in terms of asset quality, in terms of growth rate. But still, the gap is there. So we will continue to see the buying interest coming in. We will continue to see the movement in these stocks still being there. Of course, the other side also applies that if in the short term after such a sharp rise, if we see any correction in the market, they will also see correction, and that will actually be a better time for getting into such stocks.
Okay, just want to talk about what cement as a sector as well may be doing. And Kunj, what do you think cement could do, considering there are price hikes that companies have undertaken which are going to be effective from today?
Yeah, so again, a few things in terms of background, that we are at a market which is now at a close to life high. Nifty was 11,700 in August and we are 11,600 plus now. Within that, there are specific sectors that have participated and their valuations are high. So a question always comes is that okay, what does one do in such kind of market? If one wants to buy, what is it that one should buy? One obviously wants to go in for the lower valued, lower valuation oriented sectors, and which is where cement comes in. We have seen a continuous growth despite multiple views on the economy having grown up in last 2 years or not. We have seen the cement demand continuing to remain high single to low double digit growth across different geographical regions of India. The margins were in pressure in between last few months because of mainly the raw material prices being higher. Now, with growth having been where it is and is likely to be in the same high single digit growth, and all the more so if we see a stable government coming back after the elections, the investment oriented demand is likely to continue. In fact, it might as well go up. So that's where there is a positive view on the cement sector in my thinking right now. I think with a slightly medium term view, the sector can give good returns and the stocks are available at reasonably decent valuations.
I like to point out CLSA's interesting note written by Chirag Shah on Aditya Birla Fashion Retail. This is the company which owns the fashion business of Aditya Birla, and they've got Pantaloon in it. They've got some other brands, with some big brands actually, Peter England, Louis Philippe, all of them in that. Now what CLSA is making for Aditya Birla Fashion Retail is that they are becoming a large player in the innerwear business. The Pantaloon integration has done very well, and they expect an EPS growth, EPS growth of 50% in FY19, followed by 40% in FY41. Kunj, we may talk about disruption in the retail space, and the American retailers are going belly up, but if I look at Trent in India, stock at an all-time high. Aditya Birla Fashion Retail not away from an all-time high. Check on how Aditya Birla Arvind Fashions has moved after listing. It has just gone from strength to strength. Do you like anything from that space? Do you own anything from that space?
So let's first put in context the fact that there is a complete disconnect between the financial performance of these companies and the stock price and or the valuations. So while you are right that their prices and as a result their valuations are sharply high at life highs, the same is not reflected in their financial performance. Obviously, the reason being that post-Demon, as we all know, there was an expectation, and actually it has happened now. We have 2 years number to see that there has been a move towards the organized sector benefiting from the results of Demon and GST and such other moves over the last 2 years. Now, in this context, the top line of these companies have grown in some cases, but the same has not been reflected in the bottom line. Could be multiple reasons. Could be the continuous expansion that they have been taking, could be the lease rentals that they have to continue to pay, could be the high debt in some cases which results in higher interest payment, and could be the employee expenses increase and so on and so other things. So as I said, while the top line has grown, the bottom line hasn't grown. To answer 2-3 parts of your question, one, do we own something? No, unfortunately not, because our view on valuation always remained high. Unfortunately, we have been proven wrong. So have we missed out on the opportunity? Possibly yes. Will I still buy? So if I have not bought till now, probably not. As I said, coming back to the final part, the valuation is something which still looks very high. Yes, the buying can still continue in these stocks. Probably they can still continue to go up if the market continues to go up.
Couple of other names which are going to be in focus, and we've talked about Cipla. ETNA has gotten access to Form 483, which has been issued for the company's Kurkum facility. The inspected facility has got 18 observations. Now, just very quickly, they include the likes of system quality issues from both the API as well as finished dosage products, inadequate documentation of deviations, quality systems inadequate, repeat observations, insufficient training. So a couple of these in nature, but having said that, there's nothing very critical in these observations, all 18 of them. But let's see what happens and whether or not you see sentiment soured when it comes to Cipla. Kunal, what I want to talk about is what was happening with the metals space on Friday. Given that metal stocks were seeing delivery buying, and across the board, Hindalco, Vedanta, Tata Steel, all base metals were rallying pretty hard.
So yes, Aisha, and for the first time, I think in the last 3 weeks, we've seen a convincing breakout in many of the metal names, especially Jindal Steel, which rose up, I think, 8 or 9%, on Friday, and on the back of some very strong volumes, both on the cash side as well as on the F&O side. Vedanta also saw, similar surge in volumes as well. So, with volumes coming back, the stocks breaking out of a 2-month, I would say a flag pattern kind of a breakout. I believe it's a very strong sign that new, highs could be, or new swing highs could be in store for these stocks. Also, one of the key, technical indicators which I've been highlighting since last, 2-3 weeks is the break of this 200-day moving average, which generally now becomes a good decisive, indicator of a new trend in the making. And I think Jindal Steel as well as Vedanta are very close to doing that. So I believe just a confirmation of, that as well could probably lead to more, upside on the trend side for both Jindal Steel and Vedanta.
Going forward, Kunj, which are the sectors that you expect to contribute the most, let's say for that last leg of the rally, really pushing the index to its life highs? If we leave apart, what we've seen in the banking and NBFC space for a moment, we saw some amount of an uptick, let's say, in an IT, last week, some amount of strength coming in there on that sector. And we've seen other pockets like realty, media here and there perform. But overall, where do you see the contribution coming in from?
Yeah, so if we expect the market to continue to go up, and as we discussed earlier, if the liquidity flow remains, if the global money keeps coming in, we will possibly see the market continuing to go up. And again, as you rightly pointed out, that we have already seen a sharp movement in banking and financial services sector, both banks as well as NBFCs. So where will the support come in from? One, it will continue in the banking. I still believe that is where the prices can continue to move up. But the follow-up buying will come in other good fundamental oriented sectors which have not participated. And those are clearly the IT, reasonably decent numbers, growth expectation of low double digits with stable earnings, stable cash flows. That is where we will continue to see now the fresh interest coming in, because that hasn't participated at all, especially in the last 1.5 months rally. Same applies to FMCG, though the valuations are very high. Some of the stocks did participate in the last week and went to the life highs or the year highs, and as a result again stretched valuations. But that is where again we will see some buying interest coming in. Select stock in realty sector wherever the financial pressure of leverage is not too much, and there are such stocks, is where we will see the interest coming in. Moving on further a little bit in terms of contra buying, cement is something that will attract some buying going forward, and a stray buying could move to the automobile sector as well. So I think these are the spaces for next set of participation.
Just saw a flash on our screen saying that the money markets are shut today on account of the financial year close settlements. So yes, no rupee rates to really look forward to. And I think, if I'm not mistaken, there was a notification on the BSE late last night saying that today as well the markets are going to be shut or something like that. I remember reading it.
Currency market. Of course, they would be shut.
Sorry,
1st of April.
I couldn't do it. I was trying to do
1st
the
of April.
April
1st of April.
Yeah. Okay, yes. So there are a lot of theories.
We won't be here. Some other programming would have been on if markets were shut.
The show's got to go on, so we will
Not on market holidays.
There are a lot of theories now, Nikunj, behind April Fools, but yes, one of the most popular one is that April Fool's Day began in 1582 after Pope Gregory VIII ordered that the Gregorian calendar replace the Julian calendar. Some of the very most famous April Fool's pranks include the Taco Bell convincing America in 1996 that it has taken down the Liberty Bell, Google announcing launch of Google Play for pets in 2017, and also Netflix announcing buying State Rogan brands such as OnePlus, Ola Cabs, T-Mobile. All of them have started their April Fool's Day 2019 celebrations already. Which one's been your favorite? CK, sorry, you're saying something.
You had the famous one by Elon Musk where he tweeted on 1st April. And it sent the stock down by about 5% on that day. And it showed him lying in his whatever model car, almost in a state of unconsciousness. Stock went down 5% but recovered next day 4%.
But then middle after that he said, I'm going to be doing a buyback.
Yeah.
That turned out to be a bigger April Fool because the buyback never came out. And then look at what's happened to the stock after that.
Okay, let's take it across to Ajay, then find out what's not on his April Fool radar, but yes, some MSCI relief coming in. Ajay?
Aisha, but I must say you guys have done some really cool research on April Fool and its history. The big news this morning is that MSCI may be deferring its the calculation, the rejig they had planned, because of which India weight in the MSCI EM was going down. Now, this is quite incremental because it would have led to $1 billion outflow from the Indian market, mainly large cap index stocks. There were reports earlier that Sanjeev Sanyal, the CEA and Indian government have been having negotiations with MSCI to reconsider that particular decision. So though we are still waiting to hear from Mr. Sanyal, this news clearly is a positive for Indian market, especially at a time when it comes in the middle of already a raging bull market and a momentum which is favoring the bulls right now.
All right, Ajay, thanks so much for joining us with that and talking us through some of the key changes coming in there. Let's in fact get a quick check on some of those some of the new names as well in the Nifty this morning. And we were talking about some of these stocks last week, CK, but just for the sake of tracking those charts, Britannia, and on the downside HPCL, just how are they looking? Anything that we should keep in mind?
Well, I think these larger stocks, periodically get into a little bit of profit taking, but no serious selling is emerging. In fact, if you look across the board, there is no serious selling in any of the stocks really. And so long as this trend is so robust and the all-time high is very near, people would be wanting to look more at positive news flow rather than something negative, and want to participate on the long side rather than on the short side. So I think any stock staging breakout, Nikunj earlier, mentioned about Pidilite and Bata and all these stocks. I think market is really concentrating on stock staging upside breakouts rather than look at something which is softening.
So that's actually interesting because, Kunj, even last week it was the broader markets that were outperforming, and we saw a fantastic run-up when it came to the mid-cap index and to a lot of fresh names, as we were discussing earlier as well. Are there certain themes, I don't want to pin you down on specific stocks here, but are there certain themes that you're looking at or factors when you're identifying some of these possible opportunities for growth and traction?
Is that question to me?
Yes, Kunj.
Yeah, so I'll of course talk about stocks as well, but themes are what there are. We all know the themes that have been there in the Indian market. The only theme that hasn't become available in the listed space till now is the e-commerce, which is something which has been growing continuously. Of course, only the top line has been growing and the bottom line hasn't been going because the industry is going through a heavy investment phase which has continued almost over the last 4 years. So within the existing themes, again there is a contradiction that you have consistent financial performing stocks and sectors. Unfortunately, they are at a high valuation, and also so those will come from the consumption space. Also for the fact that is something that is not likely to be affected by the volatility post-election, whatever government formation comes in. On the other hand are the non-consumption, or if I may say investment-oriented stocks, which have reasonably good valuations, but their financials are obviously up, down, up, down, up, down, and also the fact that there could be a lot more volatility in store post the election results depending on the outcome. So one has to take a balanced call between the two. Being in the equity market, can't run away from there. So in terms of some specific names, I think Crompton Consumer is one stock which looks good to me, currently trading at 220 odd rupees, which is the price broadly it has been in the last 2.5 years. So there hasn't been any participation. Within that, last 2 or 3 quarters saw some pressure, mainly in terms of margins, in which in December quarter saw an improvement and is likely to continue to see an improvement in the March quarter and going forward also. So that is something that looks good. Staying with the consumption space, which as I said is trading at a higher valuation, but within that at a relatively lower valuation is a more towards a large cap stock, Godrej Consumers. Now let's keep in mind that the last 2 quarters have been quite flattish numbers, and so is likely to be the case for the March number as well. But that is the reason this stock is available at a relatively discount compared to the other FMCG names which are trading at a very high valuation. So these are some of the stocks names that come to my mind for investing for a medium term in this kind of market.
There are 2